Hey everyone, welcome back to another video. This will be a review for both what were we on? Day 11, so this will be a review for day 12 and day 13. Unlucky for some, but lucky for me in the sense that I ended a massive 15 trade losing streak. If you don't count that break-even trade there, 15 trades. Then I ended up with this little win here, which I didn't get to scale into. So, and we'll talk about that in a little bit. So, what happened yesterday was I had my zone of action, my zone of control here. I shorted, it stopped out. I shorted again here because I had a downwards bias, and that stopped out. And then finally later on in the evening, there was this long here because my bias was now long and it went short. And this has been the flavor of the whole week for me, really. And I didn't get up 7 o'clock in the morning yesterday, which would have resulted in me catching this down move here with one stop beforehand, and then I would have caught this move from somewhere around 50-ish here and added and taken off. I can't remember where the exit was, but the final exit was something like down at 19. And of course I would have added and then trailed behind the daily target. So that would have been the daily target there, but I didn't get up because I was sick. Got to the charts for, can't remember what time, but it may have been around 10 o'clock or something. I don't remember when it was. But it was after this move was on the way. Then I waited. I thought about, I actually did film a video talking about the momentum reversal here, which I showcased in another video. And if you look here, this matches all the criteria. I'll let you go back and check that if you're interested. And that was good for a more than a 3R move before it rolled over, and would have eventually taken out the stop here at 93-ish, but that's another story. So as I said, my bias got me on the wrong side of the moves, and that's been the case since I believe it was last Thursday. Let me just check the date. Yeah, since last Thursday, the 2nd. So a week now, I've just been on the wrong side of, I wanted to go short here, so I didn't take this long, and then I proceeded to take these shorts, and it was long all day. That was Monday. And then yesterday, which is day 12, which we were just reviewing, went short here, so the bias was down, my bias was down, the market went up. Then when I wanted to go long, the market went down. So I've just been stepping all over myself. Today, I just said, let's just trade in the direction of the pattern. And this is what I wanted to talk a little bit about. First, I'll just go through the trades. So I shorted here, went a bit in favor, broke the trade even because I've done some data mining, and I've found that the break-even stop after a certain distance in favor increases the edge. So I did that. On a reconfirm, I got in again here, short 22.5, added, I think it was added 12.5, and then I was looking for 5.5, and that would have been the day. And it got to 6.5. So that was one of those near misses, and I'll probably I recorded it, so I'll probably put that somewhere in this video. And then yeah, it stopped me out. It went all the way back up here and stopped me out for my blended 2.5 tick stop, which meant a full stop on a 1 lot. So I had a 2 lot, and it stopped me here for the equivalent of a 1 lot stop. And then there was a long signal right about here, right about here. Excuse me. And As you can see, that went all the way to the moon, and any target you wanted would have been fulfilled, really. So I know that I would have added, let's have a look, again with the same rules as I mentioned in the Q&A video, change of polarity. I had fib levels going up here, and then I would look for resistance against the fib that then turns into support against the fib. So I believe it was 26 is where the add would be. I would have gotten somewhere around 18, so the blended entry would have been halfway between 18 and 26, which is 22, and then you ride it up to whichever profit target is. You manage it the way you see fit, which I've got a specific way to manage the 2-lot trade, so that would have worked. And then my partner and I, because I'm lucky enough to have my girlfriend who helps me, you know, go through data and stuff. She's like my little trading buddy as well as my partner. And she was like, well, why go with bias? Because bias is what it is. It's a bias. So just let the market tell you which way it wants to go by whichever pattern triggers first, and assume every trade's going to go for distance and see what happens. We back tested that, and the result was, needless to say, far superior than the one I've got, to the tune of around about $2,800 in 13 trading days, whereas I'm currently down 450, having gone up to 500. So the trailing drawdown is about $600 away. So I've still got a chance, and this is what I'm going to implement now, because rather than complicate things for ourselves, even if we were, and this was a comment someone made, I believe it was Air Cages made this comment that you could flip a coin and make money, because let's get out the pen and talk about this, because I think it's an important point to note. If you, let's say you have, you're trading a stock, a symbol, an instrument with a $10 per tick value, and you have there's a 1 tick spread, so 1 tick spread, and commissions, let's say commissions is, just for argument's sake, to make the math simple, $5. I know it's typically less than that, but it just makes things easier. If you trade knowing this information, if you trade randomly and you were to enter a trade on the flip of a coin, you know, you flip a coin and it says long or short, and then if it says long, you buy, and your target's 10 ticks and your stop is 10 ticks. How often are you going to hit the target versus the stop? 50% of the time, right? So 50% of the time you're going to get there, 50% of the time you're going to get there. Some people say, okay, what I'll do is I'll have a 10 tick target, but I'll have a 5 tick stop. But if the entry is truly random, you'll hit the stop twice as many times as you hit the target. So what you've achieved is $0 gross. But as we don't trade gross, and people often mistakenly say that the futures market is zero sum, it's not zero sum, because the broker gets his fee and there's the spread. So a 1 tick spread is $10. A commission, round trip commission, is $5. So you don't actually, if you trade random, if you traded randomly without costs, you would end up with $0. But for every trade you take that's truly random, you should expect to lose $15. That's spread plus commission. So what I would challenge you to do, if you're struggling like me or like us all, like most of us, is go back through your trade history. Take the number of trades and see, let's say you had, I don't know, 100 trades, and see what your profit is, taking into account the spread and the commission. If your net result is negative by more than spread multiplied by plus, let's get rid of that, spread plus commission multiplied by the number of trades. If that number is more negative, if your number is more negative than this number, you're doing worse than random. And I would wager that the majority of traders who are struggling actually would benefit by random entries, because whatever methodology they're using to chase the market is as I said, they're chasing the market. They're chasing their tail like a dog and going nowhere, and the market just gobbles up your stop, and you sell here and the market goes this way. You buy here and the market goes this way. So a random entry obviously doesn't offer any edge in terms of making money, right? But now where you can skew the odds in your favor is risk management. And as the commenter mentioned, that is what puts the money in your pocket. It's not the entry, it's the risk management. And it was really illuminating to go back over the numbers and realize that had I just taken the trade in the direction that the pattern broke out of, regardless of backdrop, I didn't use a backdrop chart, you'd end up with more money. So that's what I did. I bought here, went this way, I sold here, stopped out, sold again, made back more money than what I would have, what I lost on these two trades. And of course, these are only 3 trades. But having done that over the last 13 trading days, as I said, I would have come out with 2.8 grand over 13 days. So that's the plan moving forwards. I don't know if I've got enough drawdown to be able to, because these types of strategies where the wins are so much bigger than the losses need a bit more drawdown for them to play out, but we'll see. This is the way I'm going to be moving forwards, and yeah, as I said, random is often better than what we try to do with our trades. So that's all I've got for you today. I'm not going to bother jazzing up this video with you know, music and stuff, because I've been a bit beaten down by, I've actually got pneumonia, which I didn't even know, you know, I knew it existed, but it's not a really common occurrence in a non-third world country from what I know, and I really got it bad, so I wasn't able to do the video yesterday. So this video covers yesterday and today, and I'd be interested to hear your comments, your thoughts on random trading and leaning on risk management as opposed to trade entry choices, because I think that's where people often mess themselves up. So that's it for now. Remember to trade your plan and follow your rules, and I will hopefully probably see you tomorrow. Oh, one more thing, I didn't show the P&L. Yesterday was a full stop, obviously, because I'm on the back of multiple losers, and then this is the end result today. So we've broken the losing streak. Let's see what tomorrow brings. Back here tomorrow. Fingers